Morning, everybody. 6/6/2020. I have the weekly chart in our platform. S&P 500 bull market run, tremendous as it's been. What I'm going to do here is hit, and I'm going to populate the diamonds. Okay, the markets are entering a very dangerous area. The bull market is back and has been back. This diamond that I'm looking at is the February 24th. As I recall before the pandemic came, that we were extremely overbought and we were going to go down extremely hard in that bull market run. Now we can talk bull market terms again, and I will tell you that the market has a lot of resistance at 32.57. We shot up, we made the high at 32.11, and then we faded back, and we had a close at 31.93. And this is a weekly. This is going to be the next major challenge for the bull market. And 32.57 is where I'm going to call a high alert danger area for investors that do not have skills to hedge and use risk accordingly. So when we're talking about where we're at and where we're going, and the bull market is the bull market now, the pandemic, hey, that's no longer in play. The virus is out there, but as far as Wall Street goes, no. And we've had that knife hook rally, and the Fed did everything. But I will tell you that I am putting high alert. And not only that, the S&P 500 leadership stocks that were beaten down, and you had the Federal Reserve buying ETFs, futures, stock futures, things that kept moving this bull market up. But right now, I'm going to go back to where we were and about bull markets. And if you don't listen, maybe you didn't listen the first time around when I called the tops up here. And I'm going to go ahead and I'm going to hit a few more deltas on the S&P. And now that I did that, we're going to talk about this area on the S&P where the breakout happened. 1, 2, 3, 4 weeks straight right up to hitting our major targets. Within the S&P 500 bull move, there's going to be extreme problems, and there's going to be extreme problems with stocks as well that have led this bull market run higher. And that those stock valuations are extremely at the highs now. Do not let your guard down, please, because if you do, you can run into a lot of problems. So 32.25 is going to be a major wall of resistance, 32.57, and it's all going to come down to one thing. 2/24, February 24th. That's right. And this is where the bull market gap down started. And now that we're going to enter up here in these territories, is what is the S&P 500 really worth? And has the S&P 500 really gotten far ahead of itself? And when I say that there are stocks that have ran and you have had a lot of algorithms in control of the market, which is a machine-driven event, that take assets higher or different instruments in the market. And so the thing about it is the bull run is back. There are problems now, and they're going to be coming into play. Now, once you have a tremendous move, you look at where are we really at right now? And what is the risk right now? And the risk is high. And for the new, younger people that engage in markets and whatnot, you better watch yourselves. We're market makers in options, and we buy the S&P index call options and make a fortune. So what I'm calling, when we hit the top end, we will have a pullback, and a pullback in this bull market on the S&P, and I will be going daily every day, is that we're coming up to 224. It's a major wall of resistance. Stocks are going to have the same problems. We're going to look to see in the bull market structure where the put to call ratio is in the broader market, and when these get mathematically imbalanced, you start to look where the danger zones come in, and you start to get these big pullbacks. And you get big pullbacks and bull runs and bull market runs. You get these big pullbacks when they really take the time to see what it's going to look like when we test up here. And that on Monday of next week, we could come up here and we're going to see just how strong that bull is mathematically. But we are going to go in to the upper ranges. And people are going to start thinking, hey, wow, we've had all this stimulus by the Fed. You never fight the Fed. You never know how far they're really going to go. But you are in bull market. And this bull market now is going to go up into a higher danger zone, possibly. It's already in my danger zone. But I'm talking about real danger zone. And we're going to talk about lots of things as we move forward in the summer months and the seasonality changes and what this weekly chart looks like before you and what are you going to do. You know, we update our market makers daily and we make markets all day long in different stocks, big ones, small ones, you name it. Whatever's going to pay the most money. And what I'm telling you, that this bull market run is going to run into these challenges where my cursor is. So the market would really show its strength with the pullback in the S&P to right around 29 and a quarter. That would be where the breakout happened, which is going to be this bar, and that happened on 518. On the weekly. So in bull market runs, when you get to the upper end, then you look for the bull market run to wash people out, pull back the leaders, and then set up and make markets to go higher again. But we still have a lot of challenges. The economy is open and there's lots of things going on. So what? We're only talking about this bull run. The rest of it doesn't matter. What matters right now is what side of the market are you going to be on? Are you going to get caught at the highs? Or when we get a pullback, you can buy put side so that when the markets pull back, you make lots of money in bull market runs. And bull market runs will shake people out. And the reason why I'm covering it in depth is because we have a lot of people that make markets in ETFs and markets in the S&P 500 index, where you can make a fortune like you can see before you now. That is a fortune. You should get signed up for the free 5-day trial. Now, we're guiding our big account holders, and if you get signed up for the free 5-day trial, we have market maker managers on standby, ready to meet you and welcome you here. And I would say, let's start there together. And the market maker managers are great guys. They'll be working with you daily. You'll be getting all your plays and setups. S&P 500 top end. This has been a great bull run off of the bottoms with the Federal Reserve. And you had a jobs report that helped fuel it. Democrats are going to be out. But I'm not going to go into that. They're going to be, asking where did that data come from and rah, 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 rah. The world still has its problems. And there are a lot of problems out there. And one little hiccup, you can go down very rapidly. And let us not forget that irrational exuberance. And as we go ahead and test this upper range, we had the jobs data, that was a big push. And we are in a topping pattern. And bull market runs have to shake people out. So, depending on what side of the market you're going to be on, there's nothing wrong with raising cash. Cash is king. And then relock and load with the right thing. Let us do the work for you. Here we are. And this is the bull market run. And bull markets will have pullbacks in the S&P 500 Saturday, June 6, 2020.